What is going on, everybody? This is Andrew from DeFiancy. All right, guys, we're just going to jump straight into this. We're getting this video out a little bit later than usual. Right now, we're approaching, looks like right at the end of the legacy New York session for the stock market. And we're looking at Bitcoin here. We see that Bitcoin is pretty much doing what it did, or what it's been doing over the last few weeks. If we zoom out and we look at this on the weekly, we can see that it's pretty much doing exactly what we thought it would. We talked about this a couple weeks ago, or maybe just 1 week ago, where price was likely just to stay range bound. And the reason it does this is because of a few different factors, but namely, Bitcoin does not have consistent flow. And what that means is it does not have very consistent capital that moves in every single day, rain or shine. This is very different from equities, which has a much more consistent flow into equities. This is retirements and pension funds, and there's all these different forms of collateral and different ways that people get money into the U.S. stock market. So you have a very consistent flow of capital in. You don't have that with Bitcoin. The reason why Bitcoin has these boom and bust cycles is really because of that. Or, well, there's other factors, but that's one of the reasons. Is it has a boom and bust cycle on higher time frames, and then also on lower time frames. As you can see, huge move up, choppy price action, and sometimes you get a pretty big move down after that. And this has been really the case all year. Big moves up and relatively large moves down. About 20% now each time it's had a move up, roughly. Nothing has really changed since this started occurring, which is you have the same capital just kind of being sloshed around in the market right now. It's moving from altcoin to altcoin, back into Bitcoin, then into Ethereum, and there really isn't a whole lot of new capital entering the crypto space, despite what a lot of people think. A lot of people actually believe that there's a lot of capital moving in, but that just isn't true. And that's not necessarily a bearish thing. In fact, I'm very happy that that's the case, because here soon, it will be a different story. I think whenever you get the ETF, you're going to have a different, just completely different kind of personality out of Bitcoin. You will have more regular flow, meaning you won't have like a bunch of people coming in and then nothing for weeks at a time. It'll be a lot more consistent, in my opinion. It's not going to happen day one from the ETF, but it's likely to occur over time as people get more comfortable with Bitcoin and crypto in general. So again, this price action here is just what you would expect after a big vertical move with Bitcoin. The reason why I think this market hasn't really provided more of what people are expecting, which is a flush. A lot of people are expecting this market to flush, and what I mean by flush is to have a bigger move to the downside. The reason why it's not doing that is because it's not really a great short at this point, and a lot of people are not going to sell until you get this ETF approved. It just doesn't really make a lot of sense to do it, because if you were to short anywhere in this range, you have a pretty high probability, some people say greater than 90%, that you're going to wake up one day and you're going to get an ETF approval. And wherever you are on this chart, the minute that occurs and it's actually a real approval, prices are going to be up 10 to 15% pretty much instantly. So it's just not really a great directional short yet, unless you had information that the ETF was not going to be approved. So what I'm saying is, people aren't going to sell a lot here. They might not buy a lot, but they're not going to sell a lot, and you just get this chop. Now, the bulls are still in control here, and the reason I say that, if you look at this on any meaningful time frame, there is no lower lows, and although we are topped out here, consistently topped out here now, 3 or 4 different tries on the daily at 37.8 roughly, you haven't made a new low. So, that's not bearish, really. I know a lot of people will say, wow, it's having a hard time breaking over this level. Maybe I should sell. That's not how big, people that are managing big positions, that's not what they're thinking here. They're thinking, okay, show me a lower low, and then maybe we can talk about selling something. But right now, this just keeps printing these higher lows. As soon as it prints a lower low, namely if it comes, below this 35.5 level and can't get back above it, that's whenever I think the market's going to shift into a different it'll start to behave differently. But until then, you might just range in between these two levels here. And that's not the worst thing if you're trading this. I mean, it's around 6%, I think. Yeah, roughly 6%. But there's just not going to be a lot going on until we get additional information about the ETF, or some bad news, really, that could bring you down. If all things remain in steady state, remaining equal, it's just going to range between these two levels, in my opinion. I do think that it wouldn't surprise me if you did break below this level and flush everybody out to 33.5. I mean, that's kind of what a lot of people think is going to happen anyway at some point. But until it happens, I mean, I just don't really see this as a very bearish situation from a technical standpoint, and certainly not from a fundamental standpoint. I want to talk a little bit about some of these altcoins, because this is when I think they're at the risk of breaking down at this point. If you look at a lot of these altcoins, they don't look terrible, but you can tell they're just exhausted. You have a lot of people, like I said, the same base of capital, who's probably been waiting to buy now for years, or 2 years since the bear market started. They're all entering in, and they have been. This is why we had these rallies in altcoins. It really was not new capital, and I wish it was. That would be a lot more bullish, to be honest, but it's not. If you look at the total stablecoin market cap, it's pretty much been flat. Yes, it has trended up to a certain extent, but for the most part, this is capital that was already here. So yes, a little bit of new capital, but not a lot. And that's important, because what that ends up, it creates an environment where it's really just hot potato for a lot of these altcoins. People who don't have a lot of conviction, they're just trying to sell it to somebody else higher, if they don't really believe in the project, and they just naturally will bleed if Bitcoin can't break this 38 level. And a lot of that capital will flow back into Bitcoin, and you'll have an actual increase in what's called BTC dominance. That looks to be like what is probably coming next. But as you can see, altcoins around just across the board are just bleeding. It's not super bearish, like I say. It's just people that are in profit. And look, they probably have holiday expenses. They got taxes, or tax harvesting coming up at the end of the year here. I mean, this is pretty typical, to be honest. I don't think this is anything to be alarmed about. The question is, how low can we go on some of these alts? And if you've been watching some of these videos, we like to use this Fibonacci tool. For me, I think Solana, and we're looking at Solana right now, I think that it has a good chance of coming back down to this 42 level, 40 level. I mean, if Bitcoin is not over 40K within the next few weeks, I don't think it's going to want to hold this level. Now, I wouldn't be surprised if it did. I'm not short any of these altcoins. I don't think they're particularly good shorts, but I wouldn't be surprised if they slow bled. And if you look at this has been really, again, just like Bitcoin expansion and then chop. It's the same thing with something like Solana. Big rip, and then this just slow chop grind down, which was meaningful. It was like 35% roughly over 2 months. You'll probably get something similar. This is a coin I think that a lot of people want to buy. They want to have some exposure going into this next bull market. So it might not get all the way there, but that's a level that I'm expecting it to at least get close to. If you look at some of these other altcoins, they're already headed that way. And a lot of people will say that where I actually place this Fibonacci level, this Fibonacci tool might be a little subjective, but I like basically starting from the bottom into the end of the this expansion. And for I guess for Avalanche, that puts it almost at like 15. Again, it wouldn't go here overnight. It would take a long time to get there, but over 2 months, going into January, I wouldn't be surprised. Now, if you get an ETF approval before that, just forget everything I'm saying. It's going to look way different. It's probably going to just rip, this 28 level very quickly, and then we'll be talking about a completely different situation. But if that doesn't occur and the markets are just kind of looking around like, okay, now what? It's just going to kind of bleed, I think. And if you look at, again, across the board here, it's really the same story. Huge expansion, relatively speaking, and now you're getting some bleeding. So and we talked about near, same thing. If we look at it, probably 1.5, something like that. That's when I started to get, interested again. because I think if you buy here, I mean, this is not a terrible place to buy altcoins if you're in for the long term. But on a short to medium term perspective, that's not a small move, really. I mean, it's 15%. For altcoins, that's really not that much if they're moving up 100, 200, 300, 400%, right? But if you're a trader, that might be significant to you if you're using leverage. Let's change our focus here to equities, because I think equities is probably going to be more interesting while crypto is just kind of chopping around. I do think it'll chop around also, but from a trading perspective, I would personally would rather trade ES, NASDAQ, maybe crude oil if crypto is going to be choppy. I don't like trading crypto when it's chopping around. I find it a bit annoying. I find equities to be a lot more cleaner and just easier to manage trades. So we're going to take a look here. I got these levels from some computer software that's really showing significant weekly and monthly levels, but it looks like to me this could be range bound between 4,600 and 4,500. It's kind of interesting how these round numbers always are, significant. It just goes to show you that humans are we place like significance on round numbers like 4,500 and 4,600. We haven't actually gotten to this 4,600 yet, but I could see it probably getting there and then getting rejected. We could already be topped out, but I don't see this wanting to go below this 4,500 level very easily. I think rather you'll probably range, and I'm not sure exactly how it'll look, but it's probably going to be choppy within this within a sideways range, maybe for a few weeks. And I think that would actually be bullish. I think some people, they see these big moves, they jump in, and the market starts going against them, and they start to, they get scared, right? Like, oh, it's over. Like, the rally is actually over now. That's not the case, I think, with equities. I don't think crypto rally is over. I don't think equities is over. It's more about you just have too many people in profit, and you have people willing to sell to you now because they realize this thing's overextended, right? So if you look at this, you're overextended, clearly, right? So on the daily RSI, which I don't really like to use RSI all that much, but on the daily, I think it's probably prudent to use it. You're overbought, or you're right there at, getting at overbought. You're certainly overbought on the lower time frames, like the 12-hour. You're probably not on the 4-hour anymore. That's starting to reset. But on the higher time frame, getting higher, you're certainly getting overbought, but you're not like extremely overbought. Extremely overbought is when this weekly is sitting up here at this top line from an RSI perspective, okay? So again, not bearish. Looking to scalp this. I like this kind of trading, to be honest. I prefer this choppy sideways stuff. I find it to be very easy to trade. You basically just take what the markets gives you, which is, 30 to 50 basis point scalps, and you just, go with it, right? Fade the value area highs, buy the value area lows. Eventually you'll be wrong and it'll break out, but that'll be one trade versus 5 you'll probably hit, correct, something like that. Keep your losses small. This is not financial advice, obviously, but these are actually pretty good trading opportunities for people. I think a lot of people, they see the slowness and like, I don't want to be part of that. Well, if you don't day trade, then yeah, you don't want to be part of that. If you're a swing trader, you would want to wait for quite a bit lower to get in, and maybe you would short here if you're a swing trader. But I think from a day trading perspective, I'd like to see a little bit more volatility, but this is definitely scalpable. Now, one thing I want to mention here is, we've been talking about crude really for weeks now. I want to probably get a little bit into this here. But first, I'm going to take a sip of coffee. Cheers. It's good coffee. Strong and black. So, crude oil. The reason why I think this is an interesting chart is you have the Saudi Arabian government that's basically lobbying OPEC. If you don't know what that is, that's like an oil cohort of oil-producing nation states that make decisions on, they try to control the price of oil. Now, and they actually try to manipulate it, in my opinion, but that's another story. But Saudi Arabia is basically lobbying the rest of the members to say, hey, you should cut your output so we can raise the price of oil. Now, there's some members that don't want to see the price of oil go up, probably because that might be damaging to them in other ways. Certainly would be damaging to a country like the United States if oil starts to go up. But you could see, if the Saudis get their way, you could see prices start to go up. But I'm starting to see this as a long opportunity. Now, I'm not like saying that this is where I want to long, but like if it stays around here for a while, maybe another week or something, assuming that it'll stay here, yeah, I'm going to look to probably long. But I could see this breaking down a little bit further. I don't think OPEC is going to allow the prices to get back to this low. That's kind of what I'm getting at here. And that could be a good long if Saudi Arabia actually gets what they want and the rest of the members listen to them, or at least a few of them. I'm not an expert on OPEC. Could be wrong on this. It's just my basic understanding of the situation. Let's take a look at the dollar. The dollar is just getting crushed. And this is great. This is partially, usually there's a bit of an inverse correlation with the dollar and risk assets. Not always, but there, traditionally there has been, especially with gold. And as you can see, gold really likes the dollar being crushed here. I don't really know where I don't have a target for this, to be honest. At this point, I'm just watching it. If it's continuing to stay, go down, have momentum to the downside, I see that as bullish. If it starts to show constructive price action, like it was, say here, or if it just, if it bounces really quickly, it's definitely going to have an effect on the markets. So it's just something to keep an eye on. Again, no targets for it. If we look at the VIX here, it is getting crushed, just absolutely smacked to the downside, and that's great. Markets love low volatility, and traders might not like it, but investors definitely like this. And then you have, let's look at TLT here. So TLT still continuing its, its uptrend. I'm not so sure this is going to last a long time, but this is definitely good. Like longer term, I think bonds. I'm not an expert on bonds. Common sense tells me that it's probably not. They're not going to be great investments for the longer term because of the United States debt problem. But in the short term, this was definitely a good tradable balance and may still be. But it's good, as we talked about in previous videos, to see some stability within bond, for bonds, namely bond volatility. You want to see that flatten out because that allows people to borrow more money against their collateral, long-dated Treasury bonds, and buy risk assets. One altcoin I want to show you guys before we cut this video off here. Actually, before we go to the altcoin, let's look at the economic calendar, rather. Not like a super slow week. Like there's a few things here to pay attention to. Like on Wednesday, you could have some volatility with this GDP report coming out. You could get some volatility on Thursday with this core PCE and personal income numbers. Also, U.S. personal spending and U.S. employment claims. Those are actually probably bigger than what it's highlighting here. And then on Friday, you have Jerome Powell, who's going to be speaking. I can imagine that he's going to be a little bit hawkish. But I don't think the market's going to really care. I don't want to put a prediction on this, but it seems to me that people are smart enough to realize that the Fed is just kind of full of it. They're really not, they do not have the leeway to be super aggressive raising rates. They just don't. And it's kind of common sense. When you look at there's so many different reasons for this, but the biggest one in my mind is the U.S. debt. It just is impractical to refinance that debt at high interest rates. You just can't do it. The math doesn't add up. And they know this. And larger, smarter people than me definitely know this. So I don't believe the market's going to believe them. Now, it might initially. The markets have believed them for a few days, and then it just forgets everything that he has said, and it continues to rally. It's kind of been the story for most of the year. But I don't think he's going to be able to really cause a momentum shift unless he just goes completely off script and is like intentionally trying to bring the markets down. Possible. I just find it unlikely. I don't think the market's going to believe him. I want to show you guys this project here. I find this very interesting. So it's called Vertex. This is a decentralized derivatives trading platform. So people can trade futures or perpetual contracts, which is a type of futures contract, on the Arbitrum layer 2 blockchain, which is a layer 2 on top of Ethereum. And the reason why I'm showing you this is because it has really incredible metrics here with this 1.6, almost 1.7 billion dollars today in volume. That is huge. That's an enormous amount of volume for a new DEX. So there's a reason why it has a lot of volume. And let me just show you, give you a kind of a comparison. So 1.64, I'm actually going to refresh this to see if it's any different. 1.64 billion. And if we look here, we can look at the top derivatives exchanges, which these are centralized and decentralized ranked. So the biggest in the world for derivatives products is Binance. No surprise there. It has about 38 billion. Okay. So you might be thinking, wow, that's a lot bigger than that centralized or that decentralized exchange you just showed me. But if you go down the list, you'll see that this is really an outlier. If you get to like, number 9 here, you're at, I'm not really sure. Okay, let me actually do this by volume. Okay, so it was ranking it by open interest. So if we look at the volume, maybe we should rank it by open interest. But I'm just going to stick with volume because we're already talking about it. You can see that this is competing with centralized exchanges like Qcoin, Fimex, Gate.io, CME Group. I'm not sure if that's an accurate number there. I don't think that's an accurate number for Bitcoin. It might be, but the open interest is certainly a lot higher than some of the open interest on here anyway. But showing you this because when you have DEXs that are competing now with centralized exchanges, DYDX and this platform here, Vertex, that is really positive for blockchain applications because these are like real use cases for these decentralized applications. And I know I'm like kind of going around in circles here in different places, but the reason why I'm showing you this is because there's an incentive program that actually pays the traders to trade. That's why the volume's so high. That's also why the volume is high on DYDX. So if you go to DYDX here, sorry, it took me forever. Like 800 million. So this Vertex is like twice as much volume as that. The reason why DYDX, which is the second highest volume indexes right now for perpetual products, the reason why it has a lot of volume is because it also has an incentive program, but that's worked out very well for the protocol. It's sustainable, believe it or not. They have basically a program every month where they give back the trading fees that you end up paying on the platform. They basically give you a rebate. They reimburse you for a portion of it or all of it, depending on their model. And that's really useful if you're a big trader and you're making a lot of trades. That can add up to a lot of money. So I think, if you are a trader and you're trying to, trade in it or if you're just trying to get it, if you're beginning to trade and you want to get on decentralized exchanges or just interested in them, this is definitely one to pay attention to, not just from a trading perspective. It's definitely interesting to me from a trading perspective, but also from a investment standpoint. And if you look at this, it has around $500 million fully diluted value, much smaller market cap. The reason why there's a big gap there is their circulating supply is low and they're just going to be slowly distributing these tokens out every month for the traders using the platform, this incentive program. So that gap, it'll take a while for that gap to actually close, much like DYDX. But the reason why I show you these numbers, is because DYDX has like a $3 billion, over $3 billion fully diluted value. The other one has a 500 million. So it's pretty good, right? If this ends up being, if Vertex ends up sustaining this level of volume over time, that's going to eventually be a good investment, in my opinion. Obviously, it's early. This thing is new. I would not financial advice. Let's see what happens, but definitely something to keep your eye on. I do believe that the DEXs that really start to build out a moat or just start to dominate, you're only going to have so many of them that are going to dominate. I think they are going to be super, really big deals going into the next cycle. The reason I say that is investors moving into crypto that are smart, they're not going to like think about this too hard. They're going to say, what are people using? What protocols are the users actually paying to use? And this is going to be one of them potentially. So definitely keep, all right, it has an automatic use case. No matter whether you're in a bear market, a bull market, people are going to trade. I like it. So that's all we're going to talk about with that one. And before we cut this off, let's just take a look at just the last 24 hours with some of these altcoins. You have Celestia up. If you don't know what Celestia is it's a coin we're definitely going to be talking about, I think, more. It's like a modular blockchain system. I don't want to go too much into that because most people will not even understand what that means, but basically allows applications to use different blockchains for their application. So they could actually have an execution process that takes place on Solana, for example, or maybe Arbitrum or something else, and could settle transactions on a completely different blockchain and could use data from a different blockchain. They can actually have more flexibility. That's why they call it a modular blockchain system. I guess that's what I'm calling it. It creates a lot of flexibility for applications, and I could see how in the future a lot of applications may want to use this system to some extent. And if a lot of applications are using it, I think it will have a value of some sort. What that value is remains to be seen. But right now, I don't really know if that's expensive or not, right? But if every application, or let's say like 70% of applications are using this, I would make the case that this is definitely undervalued. Remains to be seen, but something, again, to keep on our radar going into this cycle. That one could have a pretty big run if applications start to use it. I'm going to go back here. And then, yeah, I mean, outside of Axie Infinity, this Ton coin, Terra Luna Classic, which is hilarious. That should be at 0 right now, but it isn't. Pretty much flat. I think that's all we're going to talk about today, guys. Until next time, happy hunting, friends.
Hey, thanks for watching. Be sure to like and subscribe to our channel if you'd like more updates like this, and let us know in the comments, what do you think about today's video and Defiancy update and insight? Also, make sure that you join our Discord, our free community chat, where we discuss things like this, what's going on in real time. Typically, our Discord community is the first to know what's happening, and we would love to see you there. Check the link in the description. And until then, we'll see you in the next Defiancy Insight video. Bye for now.